Hello and good afternoon to everyone that's currently tuned in live with us on another episode of Phillip Trading Podcast. I'm your host for today and my name is Trent. So with me here today is my colleague William, a senior marketing executive from Phillip Futures. How are you today, William?
Very good. Good. What about yourself?
Yeah, I'm good too. Nice to see you again. So in this podcast, we will talk about the trading themes for this week and also share how traders can position themselves for the week. So I would like the help of our beloved audience today to share this video to all your friends. The more people that are watching this video, the more we are motivated to deliver greater content to all of you. Okay, so without further ado, let's jump into our topic for today. Okay, so we will be discussing on the topic, can soybean, corn, wheat prices continue to shine in first quarter of 2021? To our audience out there, if you have any question, you can message in the comment box below. Okay, so soybean, corn, and wheat has went up by over 50% in 2020. Hence, we'll be discussing whether the prices of grains have reached its peak and how should investors position themselves based on the development of the grains market. So, William, from your point of view, what do you think are the key factors that had contributed to the rise in grain prices, such as soybean, corn, and wheat over the past 6 months?
Okay. So over the past 6 months, I think there are mainly two reasons that I think has really caused the grain prices to rally. The first one I reckon is the weather. So if you really pay very close attention to our Malaysia weather, you should be able to notice that this year, or actually last year in 2020, the raining season actually started in mid-October or early October. In Malaysia, we usually experience rainy season in late November or early December. But this year, we have rainy seasons in mid-October. So this rainy season is actually part of this El Nino weather effect. Okay, so our Earth is actually round. Okay, our Earth is round. So when our side is experiencing very wet weather, the other side of the world, which is like the South America, they are experiencing very dry weather. Okay, so South America, what countries is in South America? Brazil, Argentina, and those grains planting countries in the United States. These are all part of South America. So when we are experiencing early El Nino, South America is experiencing early La Nina. Okay, so La Nina means that that part of the world is actually experiencing early drought, lack of moisture. So all this might reduce the supply of the grains. Okay, so this is the first reason. Now, the second reason is due to the demand in China. Okay, in 2019, China experienced a very serious African swine flu that basically wiped off all their porks, all their pig supply. Okay, so in 2020, China tried to re-raise all the pigs, the piglets from babies and from piglets, okay, in 2020. So this particular reason have really caused the demand of the grains in China to shoot up. And they have basically purchased all the grains, especially soybeans, all the soybeans in Brazil. Brazil is one of the biggest soybean production country, but Brazil themselves needs to even buy from another country because they have basically sell everything they have until that China can only shift to US to buy their soybeans. Okay, so this is also one of the reasons that caused the price to really rally. Yeah.
Yes, I agree with your view. So basically, the weather can be a very tricky factor, and also the demand from China has seen strong recovery recently. So for our next question, I reckon many of our audience will be interested to know, based on your opinion, will the prices of grains continue to rise in first quarter of 2021 and why?
Okay. My personal opinion, my answer is a yes. I reckon that the price is going to continue to go up because if you read the demand that is released by the USDA, you should be able to see that soybean, corn, and wheat, the demand is actually still increasing. Okay, demand is still increasing while the inventory of the grains, especially on corn, okay, corn in particular, reduced significantly. So according to USDA report in January 2021, they actually expect the corn production to drop and the inventory to drop, okay, below the expectation level. So moment USDA released this news, corn price actually limit out on 12th of January 2021. It's not very often that we see commodities price to actually limit up. So corn actually, we have seen it in corn in mid of January. And yeah, so Argentine is, now, another reason is that Argentine is the world's third largest corn supplier. And they have announced that on 30th of December 2020, they announced, the government, they announced and suspend all corn export until the end of February. Okay, they just want to make sure that they have enough supply for themselves, for their own domestic consumption. So what does this particular news actually tell us? When a major corn exporting country ban their farmer from exporting corn, what does this actually tell us? It basically just tells you that the demand is now greater than the supply. This is why if you look at the price action, corn actually move the strongest. It has the nicest trend for you to trade if you want to trade commodities. Okay, next, Russia. Russia is the world's biggest wheat exporter, which accounts about a quarter of global wheat export. And Russia itself, they announced, also in December, they announced a grand export quota, meaning that there is a limit to how much they can export, and also a wheat tax, meaning to say whatever that they export on wheat, then the export duty is going to increase. The export tax is going to increase. Reason is to stabilize the food prices, because the food prices has been going up very steeply. Inflation is coming. So the government is interfering to stabilize the prices for domestic consumption. So when we so meaning to say, when the wheat importing country, if they cannot import from Russia, or if it is too expensive to import from Russia, then they might divert to other countries to buy the wheat, such as US. So this is also one of the reasons that might cause the US wheat, the demand to actually go up. And the lastly is the La Nina. Just like I said earlier, our Malaysia, we are still experiencing very wet weather, meaning to say the other side of the world, South America, they might also still experiencing some dry weather. So if the weather is going to get drier and drier at the South America, then the production estimation by USDA might go down, which cause the demand to increase again. The prices of the grains to actually go up again.
Yes, there are certainly a lot of signs showing a supply disruption due to the various government policies and so the weather factor. Okay, let's see how the prices of grains can go, how far can it go. From a technical perspective, if investors wish to ride on the trend, what price levels for CBOT, soybean, corn, and wheat should investors look at?
Okay, from technical perspective, I reckon that soybean, corn, and wheat are all these three grains. They are actually respecting the 20 days and 50 days moving average pretty well. Okay, since it's bullish momentum in August 2020. So my personal view is that any retracement back to this level can be a very good opportunity to buy. So for soybean, I think the 20 days and 50 days, the price range from 1270 to 1350. So these are the range that I reckon investors can look at to wait for such as like a resistant turn support in between this level to find opportunities to enter. For corn, I think the range is between 470 to 510. So these are the range that investors can pay attention, see if there's any resistant turn support kind of setup before you jump in. For wheat, similar, the range is between 630 to 650. So these are the range that investors can look at to find opportunities to enter, to continue to ride the trend up.
Okay, so investors should look out for trading opportunities at the price level that William mentioned earlier. So to our audience out there who are interested to trade the CBOT grains futures, such as the soybean, corn, and wheat, you can actually open a futures trading account with Phillip Futures entirely online in the comfort of at your own home. No more hassle of coming to office or documents courier. All you have to do is just go to our website at www.phillipfutures.com.my and look for online account opening banner on the main page. For more details, you can drop us a message on Facebook and our representative will get back to you. Lastly, before we end the podcast for today, one last question for you, William. After discussing the potential opportunities, what are the potential key risk events in first quarter of 2021 that would negatively impact the prices of grains?
Okay. For factors that will affect the grains, I reckon that currently there are two factors that we need to look at. The first one is the strength of US dollar. So US dollar has actually dropped by around 5% since November last year. Okay, or just drop by over 5% in 2 months' time. So this US dollar, all the grains are actually traded in US dollar. And at the moment, US dollar is kind of like attempting to form a bottom at current level. Okay, that is trying to do a bottom here. So if US dollar suddenly go really strong, we might see a temporary sell-off in in the grains. Okay, the second factors that I reckon investors should really pay close attention is the supply side of the grains, because the inventory level that is announced by USDA, if the announcement is higher than expectation, we might see a major release sell-off on the grains, because all this while, especially at the latest 1 to 2 months, the price rally on the grains, I reckon, is mainly driven by the supply side. Okay, so supply is the one that really drives the price up. So if suddenly the supply is increasing, then we might see a very big correction on the grains. I reckon these two are the main items to look out at the moment on all the CBOT grains.
Yes, I agree with your view. So investors should look out for the strengthening of the US dollar and also monitor supply level from the US Department of Agriculture. Both will definitely affect the grains market. And now we have come to an end for today's podcast. If you have any question or any topics you want us to discuss for the coming week, you can message it in the comment box below. So thank you for listening to our podcast and happy trading for the week. Thank you for your time today.
Okay, thank you. Bye-bye.
Bye.